What is happening, everyone, and welcome back to Bitcoin Bulletin, the show that keeps you plugged into the pulse of the crypto world. Get ready, because the news cycle is moving at lightning speed, and we've got some absolutely massive updates that you do not want to miss. From major corporate strategies to surprising market shifts, buckle up, this is going to be a wild ride. First up, we're diving into how a major player is making a colossal move to boost its Bitcoin reserves, and the innovative strategy behind it. Then, we're heading to Johnson County, where local discussions are heating up about the future of digital asset operations. After that, get a load of this. A massive Bitcoin whale has made an enormous shift in assets, and we're breaking down what it means for the market. And to cap it all off, we'll look at the incredible rate at which businesses are absorbing Bitcoin, far outpacing new production. Stick around, because you're going to want to hear all of this. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. A bold financial maneuver unveiled. Get ready for a game-changing development as Metaplanet, a significant entity in the digital asset space, has received the green light from its shareholders for an ambitious plan to raise a staggering $3.7 billion. This massive influx of capital is earmarked for a significant expansion of its Bitcoin holdings, with the ultimate goal of accumulating an impressive 210,000 Bitcoin by the year 2027. This strategic initiative involves a sophisticated dual-class share structure designed to balance fundraising needs with the protection of existing shareholder interests, particularly concerning dilution. The company is introducing Class A shares, which are geared towards income-focused investors and come with fixed dividends, and Class B shares, offering potential upside through conversion into common stock. This move signals a strong conviction in Bitcoin's long-term value proposition and positions Metaplanet as a key player in the growing trend of corporate Bitcoin adoption. Metaplanet recently bolstered its treasury by acquiring an additional 1,009 Bitcoin, valued at approximately $112 million. This acquisition brings their total Bitcoin holdings to a substantial 20,000 BTC, solidifying their position as the sixth-largest corporate holder of the cryptocurrency globally. The average acquisition price for these holdings stands at $102,607 per Bitcoin, representing a modest profit relative to current market prices. The company has also been actively managing its capital structure, issuing new shares and managing early bond redemptions to facilitate these Bitcoin purchases. However, the path forward hasn't been without its challenges. Metaplanet's stock price has seen a considerable decline of 54% since mid-June, which has added pressure to its fundraising efforts and investor incentives. To navigate this, the company is planning an overseas share offering to raise around $880 million, a crucial step in securing the total $3.7 billion needed to achieve its ambitious accumulation targets. Analysts are closely watching how these capital-raising efforts will unfold, especially considering the impact of the stock price drop on investor interest, such as that of Evo Fund, a significant shareholder. The broader market is observing this trend of corporate Bitcoin accumulation, with firms like Strategy, formerly MicroStrategy, leading the charge. J.P. Morgan has noted that this increasing institutional ownership, now accounting for over 6% of the Bitcoin supply, could be contributing to greater price stability. Despite the inherent risks associated with market volatility and potential liquidity constraints, Metaplanet and other forward-thinking companies are demonstrating a strong commitment to the long-term growth potential of Bitcoin through strategic treasury management. Hold on tight, because the implications of these corporate strategies are far-reaching. Next, we're shifting focus to local governance and how it's grappling with the rise of digital asset operations. Local governance navigates digital assets. In Johnson County, Tennessee, the conversation surrounding digital asset operations, particularly Bitcoin mining, is intensifying, leading to discussions about potential regulatory measures. The County Commission recently considered a resolution to adopt the County Powers Act, a state-provided framework that would have granted the county limited authority to regulate business developments, including Bitcoin mining facilities. However, the resolution did not pass, with commissioners divided on the matter. Following this outcome, the county is now exploring alternative approaches, with a moratorium on Bitcoin mining operations being a prominent option. Such a moratorium, similar to one implemented by neighboring Johnson City, would temporarily halt the establishment of any new Bitcoin mining ventures in the area for a period of 1 year. County Mayor Larry Potter expressed the county's intention to closely examine Johnson City's experience and the insights gained from their research into Bitcoin mining regulation. This exploration comes at a critical juncture, as the topic has already generated significant community discussion and debate. In Mountain City, local leaders had previously engaged in discussions with a Bitcoin mining company, CleanSpark, regarding the potential establishment of a facility. These discussions ultimately did not materialize when the Board of Mayor and Aldermen failed to approve the necessary rezoning for the proposed site on Rainbow Road. For some residents, like Bill Hart, the prospect of a moratorium is a welcome development. Hart believes that even a temporary halt would provide much-needed clarity and an opportunity to consult with experts on how to effectively regulate Bitcoin operations should they be permitted in the future. The initial argument for supporting a Bitcoin mine in Mountain City centered on economic benefits, specifically that a large power-consuming business would help maintain stable electricity rates for residents, especially after the closure of Parkdale Mills, a major local employer and power consumer. However, Hart remains skeptical, citing his own research, which he claims indicates widespread negative impacts from Bitcoin mining operations in other locations, including environmental pollution and significant increases in utility bills, alongside a detrimental effect on property values. Concerns have also been raised within the community regarding potential conflicts of interest, specifically noting that 3 county commissioners have ties to Mountain Electric. While News 5 was able to reach Freddie Phipps, who stated he had not worked for Mountain Electric in 10 years, and Rick Wallace, who asserted his wife's employment with the utility had no bearing on his vote, efforts to contact Commissioner Gina Mead were unsuccessful. The Johnson County Commission is scheduled to meet again on September 18th, where Mayor Potter expressed optimism that the moratorium proposal would garner enough support to pass with a simple majority, indicating his belief that the commissioners' decisions will be guided by their understanding of the issues and their local responsibilities. This local debate highlights the diverse ways communities are engaging with the evolving digital asset landscape. Now, let's turn our attention to a seismic shift in the crypto market as a major whale makes a significant move. Massive capital rotation signals market shift. The cryptocurrency market is abuzz with news of a colossal transaction where a significant Bitcoin whale has reportedly moved approximately $4 billion worth of BTC, converting it into Ethereum, ETH. This substantial rotation of capital has ignited widespread speculation about a potential shift in market dominance, with many questioning if Ethereum is poised to reclaim the spotlight as Bitcoin faces increasing market pressures. Crypto analysts are closely monitoring this unprecedented move, with some, like Rect Fencer, predicting a dramatic price surge for ETH, potentially reaching as high as $15,000. The sheer scale of this $4 billion conversion from Bitcoin to Ethereum has captured the attention of the entire crypto community, sparking intense debates about its implications. Market participants are likening the event to the onset of a rotation season, a period where substantial capital flows from one dominant asset to another. This sentiment is echoed by observations that the trend isn't isolated to a single whale. Several long-term Bitcoin holders are reportedly diversifying into Ethereum. Many in the community believe that these large-scale players might possess insights or information not readily available to the broader retail investor base. Alternatively, some speculate that this strategic move is intended to inject momentum into the Ethereum market, drawing attention and increasing trading volume while Bitcoin experiences a period of consolidation. Regardless of the underlying motivation, proponents of Ethereum are increasingly confident, predicting a potential climb to $10,000 from its current trading price. The timing of this whale activity is particularly auspicious for Ethereum, which has seen relatively subdued price growth following its earlier rallies. This sudden surge in demand from a major holder could serve as a catalyst, accelerating Ethereum's momentum and potentially paving the way for a new all-time high. Further evidence supporting this trend comes from multiple reports indicating a broader pattern of whales rotating their assets from Bitcoin to Ethereum. Blockchain analytics firm CMDR noted a recent instance where a whale sold roughly $435 million in Bitcoin and then promptly converted nearly the same amount, $433 million, into Ethereum. Market expert Ash Crypto also highlighted that since August 20th, addresses that have held Bitcoin since its early days have divested over 35,991 BTC, valued at just over $4 billion, in exchange for 886,371 ETH, worth approximately $4.07 billion. Adding to this narrative, crypto analyst Ali Martinez pointed out that whales have collectively acquired more than 260,000 ETH within the last 24 hours alone. Market observers, such as CryptoGoose, have also revealed that Ethereum reserves on exchanges are rapidly diminishing, a clear signal of accumulation by significant players and a reduced availability for retail traders. This confluence of data suggests a strategic repositioning within the crypto market, with substantial capital flowing towards Ethereum. This dramatic shift from one major asset to another certainly raises eyebrows and prompts serious market analysis. Coming up next, we're looking at how businesses, both big and small, are actively acquiring Bitcoin at an unprecedented pace. Businesses outpace Bitcoin production and acquisition frenzy. Analysts are sounding the alarm as businesses, both private and public, are demonstrating an insatiable appetite for Bitcoin, acquiring the digital asset at a rate nearly 4 times faster than miners are able to produce new coins. This significant disparity between acquisition and production is fueling concerns about a potential supply crunch and could signal the dawn of a new phase of scarcity-driven growth for Bitcoin. Financial services firm River reports that in 2025, companies collectively purchased an average of 1,755 BTC per day. This figure is further bolstered by Bitcoin ETFs, which are adding an average of 1,430 BTC daily to their holdings, while government entities are also participating in the trend, acquiring approximately 39 BTC per day. In stark contrast, the daily production rate for Bitcoin miners stands at a mere 450 BTC. This aggressive accumulation is particularly evident in the first quarter of 2025, during which treasury companies alone acquired an impressive 159,107 BTC. This influx has pushed the total Bitcoin holdings by businesses to an estimated 1.3 million BTC. Leading this corporate acquisition drive is Strategy, formerly MicroStrategy, which holds a colossal reserve of 632,457 BTC, making it the largest known corporate holder of the cryptocurrency. While Strategy maintains that its aggressive buying strategy does not significantly impact short-term prices, attributing this to the prevalence of over-the-counter, OTC market transactions for most of its acquisitions, analysts are increasingly focused on the implications of dwindling exchange reserves. They speculate that this shrinking supply available on exchanges could become a potent bullish catalyst for Bitcoin's price. The trend highlights a growing institutional conviction in Bitcoin as a store of value and a potential hedge against inflation, mirroring the early adoption patterns seen with gold. The diversification of Bitcoin holdings across various corporate treasuries and investment vehicles, such as ETFs, suggests a maturing market where digital assets are increasingly integrated into traditional financial strategies. This increased demand, coupled with a capped supply that will never exceed 21 million coins, creates a fundamental economic dynamic that could drive significant long-term value appreciation. The challenge for miners remains to maintain profitability amidst increasing network difficulty and energy costs, while the demand side is clearly demonstrating robust growth, driven by entities that can absorb large quantities of Bitcoin without causing immediate price volatility through exchange sales. The interplay between this heightened demand and the fixed supply schedule, especially with the halving events reducing new supply over time, is a key factor that investors and analysts are watching closely as it could reshape the future landscape of Bitcoin's market dynamics and adoption. It's clear that the demand for Bitcoin is stronger than ever, influencing markets from corporate treasuries to individual investors. That's all the top stories for today. But don't go anywhere, we've got a quick recap and your final call to action coming right up. And that's a wrap on today's Bitcoin Bulletin. We saw Metaplanet's massive $3.7 billion Bitcoin push, Johnson County discussing moratoriums on mining, a $4 billion whale dump into Ethereum, and businesses gobbling up Bitcoin faster than it can be mined. If you found these updates electrifying, do us a favor. Smash that like button, subscribe to the channel for more, ring that notification bell so you never miss a beat, and let us know your thoughts in the comments below. For all the latest, follow us on all our social media channels. We'll catch you in the next one.